Well, it's turning out to be another weak session for the market, second day in a row. So the cheer from the government announcements, from global recovery, all of that lasted only for 3 days, after which, of course, it's expiry as well. So a lot of winding up of trades are happening right now. But generally, there's a lot of profit taking which is setting in. Let's talk about market with Manish Jain of Ambit also joining us right now in the discussion. Thank you very much for your time. You're making a case that this weakness in the market could very well continue for the next few months, if not days. But at the January to March kind of a period, you don't rule out a recovery and buying may start coming in. What is the hypothesis which you're setting your argument on?
See, I think broadly speaking, the concerns that people have on the market are twofold. One is essentially on the weak consumption demand, and the second one is essentially the liquidity crisis because of the NBFC situation, which have hit certain sectors much harder than the others. For example, autos, right? So a large part of the glut that we see in the market is on account of that. I think the last 1 month or so has made me a little more optimistic. I think when you look at the large cap listed space as far as consumption is concerned, ex of autos, the numbers have actually been fairly decent. They have been fairly better than what most people expected it to be. That makes me believe that there is inherently a lot of demand as far as consumption is concerned on the ground, as far as consumers are concerned. Probably it's more to do a little bit with the supply chain and the channel financing, which is kind of holding the numbers back a little bit. And as soon as that problems get addressed, I think this problem will get addressed too. So I'm giving it like 6 months. And particularly on the liquidity side, which a space NBFCs have kind of vacated, I think the PSU banks need to step into that space, and it'll probably take a little bit of time. See, last 1 month or so, what we've seen is RBI nudging the PSU banks, and now the finance minister nudging the PSU banks to pass on the interest rate cuts onto the retail consumers, as well as at some point of time, these guys are going to step in. So my belief is that Jan to March is going to be the quarter when the anniversarization of the bad numbers starts to happen. So automatically, one is optically the numbers start looking good, and second is these measures come in, which gives you a double fill up. And I think that's essentially the reason why I believe the markets start running between October to December, and the numbers actually follow up with a little bit of a lag between Jan to March.
Fair point. Manish, we were talking about the slowdown issue, right? But there have been managements on our channel and which are really braving the slowdown very well. What are your thoughts on the segments of the market which are doing phenomenally well? We listened to Dixon Technologies Byte in some time, but they were on our channel and they were saying that the segment they are operating in continues to grow very strongly. So this slowdown thing, surely there is reflection in the numbers, but do you think it's not as wide based as some people are making it out to be?
No, absolutely, I agree with you. Because, see, what perplexes me a lot, what surprises me a lot is the fact that there is a general perception around a case which a lot of economists also building is the economy is really not as strong as it is perceived to be, and that the numbers, there is a little bit of the fact that, at 6%, are we really growing at a full capacity or not? And then we hear about consumption slowdown, which, people talk about in general quite a bit. But then when you look at the certain parts of the consumption, like for example, food and beverages, when you look at alcohol, tobacco, when you look at personal products, right, as well as durables, handsets data, for example, if you look at it, barring autos, I'm not seeing in general a very widespread slowdown which is happening across the board.
Sure.
I think what people are missing out and what is in general happening in the market is a large amount of shift which is happening from unorganized to organized. So there's a certain bit of a lagged effect of GST and the EVA bill and everything which is now starting to flow in. And in general also, when the overall macroeconomic situation tends to be a little poor, the competitive edge as far as these unorganized sectors and unorganized players is concerned is losing out a little bit. And that's where I think the shift is happening, and that's where I think people are getting it wrong in terms of the overall consumption being weak, the overall demand being weak, but it's not reflecting in the numbers as such. Sure. And that's essentially the reason why I believe that things are really not as bad as people are making out to be, and the pullback can actually be much sharper than what most people expect it to be.
Manish, commodities is an area which is a complete avoid in your view. Does it include oil stocks? Does it include commodity metals or blanket avoid on commodities? And what's the rationale?
See, one is, there are basically two reasons why we try to avoid anything which is cyclical in general. One is that you need to get the timing absolutely right. which in general is going to be a very difficult task. I think 5 times out of 10 you are going to get it wrong, right? So the perfect timing of getting in and getting out, timing the cycle right, is always going to be a little tough. And second is that when you look at the catalyst which drive the earnings and the stock prices actually lie external to the environment, right? And there are so many monitorables and so many deliverables in terms of the rupee dollar rate, in terms of the oil prices, in terms of the regulatory environment. When you look at not just oil and gas, but also utilities, constructions, general attitude of the government in terms of spending, everything. Right, that it inherently tends to become a really risky bet. So it becomes more of a short-term punt rather than a real long-term investment, a philosophy like which we actually inherently believe in. Right. The best example which I give everybody is when you look at oil marketing companies, right? For 3 or 4 years, we kept touting that story out and we kept, pushing it. And that 1 rupee unraveled everything out overnight.
That's
right?
Right. Complete de-rating happened. I remember that. But there is one very loved stock in the commodity space. It used to be a commodity stock, Reliance Industries, but now it's becoming a consumer stock. Yes. And this AGM onwards, Mr. Mani said that we are a technology company.
Yes.
That's the changing shape of Reliance Industries.